Okay, hi everyone. This is Katie. So today I'm going to give a lesson on understanding the net liquidation value versus the true value of your portfolio. As you can see, in the broker form, there's this net liquidity value here. This is your net liquidation value. While the true value of your portfolio would need to take some calculation. So now we need to unpack the difference between these two important concepts, the net liquidation value and the true value of the portfolio. So first and foremost, what is net liquidation value? Well, NLV for short. Think of NLV as what you will get if you sold everything in your investment account now. So imagine you own some stock options and you have cash sitting in your account, cash holding here. When you calculate NLV, you will add together the cash you have, the current market value of your stocks, and the value of any options you own. So if you decided to sell everything today, the NLV tells you how much money you actually walk away with the sale or with after the sale. Now next, what is the true value of your portfolio? The true value is a bit different. It is about understanding the overall worth of your portfolio, not just what you could get right now. So the true value actually takes into account of all the cash you have, the potential outcomes from your options position. Example, your calls and your puts. So for example, if you sold a call options like Pfizer, selling a call option at February 07, 2025 at $27, the true value considers what happens if the options get assigned, which means you have to sell your stocks at a predetermined price. The predetermined price here is the $27 strike price. So putting it all together, we can just have a simple example. So hypothetical, let's say you have $1,000 in cash, 100 shares of a stock price at $50 each, so it's worth $5,000. And you sold a call option for that stock, which might get assigned. Your NLV is pretty much straightforward. $1,000 in cash plus 5,000 in stocks equals 6,000. However, your true value could change depending on what happens with your options. If the options is assigned, you receive cash for the stock at the strike price, but you wouldn't own the stocks anymore. So it could look like this. You would get $5,200 from selling your shares if it's assigned at $52. Let's say the strike price of your call options is at $52 plus your cash of $1,000. So your true value in this context would be the total of $5,200 plus $1,000, which equals $6,200. This reflects not just the current market value of your assets, but also the potential cash you could have after the options situations resolves. So just take a look at the example here for TNT. We have a look at the current market price is $96.90. So let's say on January 31st, 2025, at $97 or 96.90, $97 you sold a call options for this. You get a premium of let's say $1.50, which is $150. So your NLV is actually your $150 plus $96.90 times 100, which is 150 plus $9,690. However, the true value of your portfolio is your $150 cash on hand plus the strike price that you sold your calls at, which is $97. So it's $9,700 plus 150. So there is a difference in these two values computed. Now, why is this important? Because uh, the strategy that I have been using, it's the options wheel strategy. It is a systematic approach to generate income from options selling. And how it works briefly. So example, I will sell cash secured puts on the stock itself. So let's say for Fortinet, it's $96.90. And 5 days after, I want to sell a cash secured puts on this stock. I will sell at the money or near the money, which is like $97 strike price. And the puts that I will be getting is the bid and ask price average. So it's about 1.35 plus 1.69 divided by 2. So it's about $1 and 52 cents or 53 cents. So that would be the premium that I will get. Now, this important concept is that you are selling options on a stock that you like to own. The intention is to actually wanting to get the stocks. However, you sell or put options so that you can get the stock at the same time and also get some premium in doing so. So that's the intention of selling a put options, as a put options is the obligation for the buyer to exercise its rights to either sell you the stock or to get the stock from you. So in this case, I sold a put options at $97 for Fortinet to expire on January 31st, 2025. So on January 31st, 2025, if the price drops below $97, the strike price, I will be assigned and I have to buy the stock at $97. So once getting assigned, I will be owning the stock and I can proceed to the next steps. Next, I will be selling the covered calls, which means that I own the stock. I will sell a call so that if the stock rises above the strike price, I will have to sell the shares at the strike price back to the buyer of the option. And in this case, when I sold the covered calls, I also keep the premium. So if what will happen if the shares do not rise back up the strike price? Hence, the call options will expire out of the money, and I will just continue selling calls and keep on earning the premium. So when using the wheel strategy, the focus should be on the true value because you are not just looking at the immediate cash. You are also considering the long-term potential of your positions. So by focusing on the true value of your portfolio, you recognize that even if a stock is temporarily down, its potential for future growth matters. This strategy is about the flow of income and long-term effects, and not just the immediate cash you could realize through NLV. Hence, true value of your portfolio provides a more holistic view of your investments, helping you maintain a long-term perspective that aligns well with the real strategy. And don't worry, we will talk about the options real strategy in future lessons, so make sure to stay tuned for that. So, in conclusion, or in summary, NLV is about what you could liquidate now, while true value involves considering how your options might play out in the future, especially with strategies like the whale. Understanding these differences can help you make better investment decisions and manage your portfolio more effectively. So, if you find this video helpful, don't forget to like, subscribe, and leave a comment below. Also, remember to turn on your notification bell. So thanks for joining me today and have a nice day. I will see you in the next video.